Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Silver prices to soar by 40+%. Here's the case, says analysts. That's extremely bullish for silver, but we know that the potential is there. All it takes is time. A lot of people are saying silver could reach the 100+ level in the next 3 to 5 year range. Even silver millionaire Jim Rogers, who's made millions on Wall Street himself, said if you could invest into any single thing, whether it's stock markets, Bitcoin, whatever the case is, in the next 3 to 5 years, silver has potential like nothing else. So anyways, let's see what the analysts have to say about silver appreciating even above 40%. And I'm curious what gold would do if silver does do this, because we know that silver has to outperform gold. I also have another article talking about how silver will close the gap on gold, investors say. So very bullish articles. I love hearing different perspectives in the world of precious metals. If you want to check out some of the other videos I posted today, make sure you go check those out as well. Some good stuff. So anyways, let's jump into it. Silver prices are poised to break out to the upside in the magnitude of over 40%, owing to fundamentals created by COVID-19 and an excessively high gold-silver ratio that is expected to mean revert, according to Nathan Rhines, writer of Seeking Alpha. Technical charts show that the gold-to-silver ratio now stands far above the historical average, with a reversion to the mean soon being a certainty, Rhines said in a recent report. To be sure, the ratio can vary significantly, but for over a century, it has averaged around 60 and has spent the overwhelming majority of the time in the 30 to 90 range. On 2 prior occasions, the ratio approached 100, but it never crossed that milestone. And even if it did approach that milestone, it always reverted back to more low levels, meaning that silver outperforms gold. The gold to silver ratio is a measure of how many ounces of silver it takes to buy 1 ounce of gold. It currently stands at 109. Rhines used that metal's respective exchange-traded funds to calculate how 2 metals compare to the historical means. The ratio of the SPDR Gold Shares GLD and iShares Silver Trust SLV ETF is now a record 3.5 standard deviations from the mean. It is clear that silver's on sale, Rhines said. A regression back in the inside 3 sigma bound within a few months is almost a slam dunk. Pulling back the 2 sigma by the end of the year is reasonably likely, and a pullback to the 1 sigma line within 2 years, while far from certain, is more probable than not. A reversion to just 1 standard deviation above the historical mean would imply that the price target for SLV is $19.79, a 38% increase from current levels of $14.38. A reversion to the arithmetic mean that would imply a target of $24, up 67% from today's levels. In the report, Rhines documented the historical performance of silver during periods of financial distress. I am suggesting that in periods of financial and economic uncertainty, the precious metals shine. I believe we now find ourselves in such times. In the 2008 financial crisis, gold was first mover, but silver soon followed and eventually surpasses gold in relative terms. The pattern may be repeating. The precious metals' role as inflation hedges is eclipsed by their standing as safe haven assets during uncertain financial environments. I think it is safe to say in the current environment qualifies such a scenario, and while no analogies are perfect, a look back at the lessons in the financial crisis and its aftermath provide a useful context for today. During the last financial crisis of 2008, silver doubled in under 2 years, then doubled again in 7 months before retracing from its 2011 high of $50. While both gold and silver should do well during a recession, silver is expected to outperform, owing to its higher sensitivity, or beta. SLV has a beta of 1.46 with respect to GLD. On the other hand, GLD has essentially no correlation to SPY. Rhines said, in other words, if you are bullish on GLD, you should generally be bullish on the SLV as well. Rhines' view that silver would outperform well during this current financial crisis differs from that of other financial analysts who see silver's performance during the market downturns tied more closely to the base metal of the industrial use. Phil Strable, chief market strategist of Blue Line Futures, noted that there is a strong correlation between equities and silver as shown in the chart below, which is definitely true. If I show you the chart of the S&P 500 and the chart of silver, they look too eerily similar, which tells you that there's a demand concern over the demand picture from the industrial side of things. Analysts at Refinitiv have also noted that when looking at several recessionary periods, and not just the last one in 2008, one can deduce that silver has not always performed well during a recession. And that could be because it's not used as a monetary metal as much as gold is. So this is another article I want to share. Curious what you thought about that first article. Could silver rise 40%? Could it reach that $20 range in the next 3 to 6 months? Some speculate much higher. I definitely think it's going to be around that range to be realistic. So investors are now convinced that silver will soon rally after the gap between it and gold grew to its widest level in over 300 years. Most of the commentators and analysts say that the industrial metal is valued cheaply even given the coronavirus slowdown. In March, the price of the ounce gold was 125 times greater than the amount of silver. That is a record that goes back to 1,687 according to data compiled by one veteran gold trader. Since that time, the gap is closed to about 113 times, and the analysts believe that silver gains are more possible. More gains are imminent as economies begin recovering from the shock of the virus-related cessation and lockdowns. Demand resumes in the use of silver in solar panels and electronics. The longer gold keeps having a good performance, you will get speculators who will go, "Oh, silver's cheap. It's not the most complicated argument. It's true." As speculative fever increases, retail investors will go crazy, and then they're feverish. You're close to the top. Market prices plunged to an 11-year low of $11.62 a troy ounce around mid-March. However, the metal has since rebounded to the $15 level as holdings of silver-backed exchange-traded funds surged to record highs in May of 675 million ounces. Bank of America analysts think that silver may gain $20 in the next 12 months as economic growth from around the world rebounds. After the 2008 financial crisis, silver surged 440% from its bottom to $48.44 a troy ounce in 2011. Gold has gained 11% this year to reach $1,690 a troy ounce due to investor demand for the traditional safe haven asset. In the first quarter of 2020, the holdings in gold-backed exchange-traded funds will increased sevenfold to record highs of 3,185 tons in March, according to the Gold World Council. The recent rally was a possible sign of deep anxiety that has developed about the global financial system, according to Mr. Norman. The gold-to-silver ratio was about 12-1 during Alexander the Great's time, and Carnegie Temple inscription in ancient reports is 13.3-1. Gold's safe haven status is coming to the fore. Normally, you'd expect silver to come along for the ride. Now, metal demand. Almost 50% of the silver demand originates from the industry sectors, especially car and solar power industries. These industries have been heavily affected by the virus aftermath, which also exposed silver to the economic efforts of the virus. Solar power, and that kind of came full circle. Solar power projects are facing delays as the electronic supply chain has also suffered from weaker consumer demand because of the virus. Metal Focus analysts predict that the industrial demand for silver will plunge 7% in 2020. With considerable declines across all industries, it is highly unlikely to be offset shutdowns in mines in Peru, Mexico, Argentina that will have a surplus of 14.7 million ounces this year. Now we can go to an analyst at Standard Chartered, Suki Cooper, said that silver must have solid demand from industries and investors for its price to outperform. But that may not happen until later this year. But many still believe that silver is too cheap even amid this virus slowdown. The chairman of the Charterist Treasury Portfolio Managers, Ian Williams, said silver was good as gold as a hedge against inflation. He explained, "You can go back 3,000 years before Christ. Silver has never been this cheap relative to gold. There is just no justifiable reason." Gainers. Silver miners provide more upside to a surging price than gold miners, according to Mr. Beasley. Most of the miners in the market need a price of about $17 to break even, he added. When silver starts to take off, the returns in silver versus a gold producer are 2 to 3 times. Among the biggest gainers in the industry so far, First Majestic Silver, a Toronto-listed miner, their shares gained 29% in April, which almost double the rise in the Canadian benchmark. Last week, Eric Sprott, a Canadian mining billionaire, made his largest personal investment in silver. He acquired $42 million stake in Toronto-listed explorer, the MAG Silver. Enthusiasts believe that the metal is used in clean energy technologies that are set to growing demand like solar panels and electric cars. Silver is also used in 5G, mobile infrastructure, and radars for autonomous vehicles. Other new usages are emerging too. In March, Samsung introduced a new lithium-ion battery. The battery uses a thin layer of silver carbon material rather than graphite on its anode. Philip Newman, an analyst, Metal Focus, said, "Because silver has such a wide range of applications, when one slows, there is potential for another to pick up. The range of applications argues for a very strong future," which I definitely agree. So, what do you think about all this? There's a lot of information, but just to wrap things up, gold and silver are definitely bullish for the medium to long term. The short term, things could stay low, but that just means it's opportunity to buy your silver for cheaper, right? That just means you have a longer time to capitalize, to buy silver for as cheap as possible, lower your dollar per ounce average, lower your dollar per cost average, get a nice position in, so then when you sell your silver, you make the most profits. So anyways, I'm going to wrap this video up here. The link to these two articles will be in the description. Let me know if you enjoyed this article. Make sure to smash the like button. Subscribe if you're new. I post daily videos. Also turn on post notifications so you get notified every single time I post a video. This was Silver Slayer. I'll see you guys soon. Peace.